Hey there. Have you ever heard of the stock market and thought, what on earth is that? Don't worry. Today we're going to explain it using something everyone knows. Eggs. Imagine you're a farmer. You have hens, and every day they lay eggs. These eggs are your product, your business. Simple enough, right? Your egg farm is now a company. It has value. It has income, and it needs money to grow bigger. But where do you get that money? Here's the idea. Instead of borrowing from a bank, you split your farm into tiny pieces called shares. Each share is like one slice of your egg farm. You take those shares and go to the stock market, a big place where people buy and sell pieces of companies. Like a marketplace, but for businesses. Investors, regular people with savings, give you money, and in return, they get shares of your egg farm. Now, they own a tiny piece of your business. With that money, you build more hen houses, hire workers, and produce more eggs. Your business is growing, and that's great for everyone. Because your farm is doing well, more people want to buy shares. When demand is high, the price of each share rises. Investors who bought early are happy. The stock exchange is like a giant egg marketplace. Companies list their shares here. Buyers and sellers meet every day, Monday to Friday, to trade. But wait, if the farm has a bad season and egg production drops, fewer people want shares. So the price falls. That's the risk of investing. You've heard of a bull market? That's when prices go up, like a bull charging forward. A bear market? Prices go down, like a bear swatting things down. Easy. When your egg farm makes profit, you can share it with your investors. These payments are called dividends. It's like saying, thanks for believing in my farm. But here's the thing. If the farm goes bust and egg stops selling, the share price crashes. Investors can lose the money they put in. That's the risk. Ever heard? Don't put all your eggs in one basket. In investing, this means spread your money across many companies. If one fails, you don't lose everything. Companies like Apple, Amazon, and Google are all on the stock market. They've sold billions of shares. Millions of people own tiny slices of these companies. There are two ways to make money from stocks. 1. The share price goes up and you sell for a profit. 2. The company pays you dividends regularly. Passive income. The stock market can feel emotional. When prices rise, people feel greedy. When they fall, people feel scared. The best investors stay calm and think long-term. History shows that over long periods, 10, 20, 30 years, the stock market tends to go up. The key is patience. Plant your egg today, grow a tree tomorrow. Today, anyone can invest. You open a brokerage app, pick companies you believe in, and buy shares with as little as a few dollars. The market is open to all. So remember, shares equals slices of a company. Stock market equals place to buy and sell. Prices go up and down. Diversify, stay patient, and never stop learning. Happy investing.